Good morning. I hope this message finds you well. For those of you I haven't met, I'm Luke Weber, the newest member of BDL Advisors. As Director of High Net Worth Strategies, my role involves developing tax advantage planning and investment strategies for our clients. Now, with the constant news cycle discussing the election, I thought I would share some interesting facts about the potential outcome of the election from a recent presentation I attended with Dan Clifton from Strategas Research. Now, if you look at the last 45 years, there have been four metrics that have predicted presidential elections. In fact, with no candidate winning since 1980 without at least three out of the four in their favor. Now, these metrics are one, the VIX, which is essentially a measure of market volatility. The lower volatility, the better it is for the incumbent party. Secondly is the S&P 500 return. If the market is higher in the 3 months leading up to the election, it generally favors the incumbent party. The third is the misery index, which is a combination of unemployment and inflation. And if that number is lower over the previous 12 months, it's generally better for the incumbent party. And lastly, the strength of the dollar. A weaker dollar favors the incumbent party as well. So if you look at the current status of these metrics, they're split 50-50 with Trump and Harris. But a few things to think about. One is on the misery index, that number is lower over the last 12 months, but higher than it was 4 years ago. So will voters focus on the 4-year number or the last 12 months? Secondly, the S&P 500, if it closes below 5,500 on Halloween, it shifts the favor from Harris to Trump. And lastly, VIX and the dollar. Those just recently moved into Trump's favor, but I would say the margin is not that significant at this point. Now, while the election outcome is important, studies show that it generally has minimal long-term market impact. Regardless of the winner, markets and companies readjust post-election, and we've actually seen a median return of nearly 10% following Election Day over the next 12 months. Financially, the biggest impact from the election will likely be tax policy, and depending upon the makeup of the House and the Senate, that will determine the outcome of tax policy. But the good news is we'll have time to plan over the next 14 months. So we look forward to working with you for the rest of the year and into next year. If you'd like to discuss further, feel free to give me a call. Have a great day.